Charitable giving isn't just about being generous. It's also one of the cleanest, safest ways for medical professionals to cut their tax bill. Today, I'm going to show you how donations, deductions, and donor-advised funds can save you thousands without adding more to your already overloaded plate. If you want smart, legal tax relief that actually feels good, you're in the right place. And you're going to want to stay tuned until the end because we've got some great tips and a special offer for you. As a medical professional, you already dedicate your life to saving others, an admirable calling, but did you know that you could extend your life-saving impact beyond the hospital or clinic and into your financial strategy? So by embracing charitable giving, you can simultaneously support causes close to your heart and unlock significant tax savings. So what we're talking about today is how to optimize what we give to the charities as well as our taxes. So these strategies offer a win-win for everyone involved. And what I would say here is my goal is that if you're deciding to donate, if you're deciding to give, is that what we want to do is make sure that they can get 100% of every dollar that you want to give them. Because as we know, in the crunch that we're in right now with the economy, inflation, all of that, every dollar counts. So let's give them 100%. So before we get started, I want to mention something. You may have some questions on this subject as we're looking to make or increase our charitable donations this year. And a few of you have reached out to ask how to talk or to work with me. Well, it's really simple. All you have to do is book a 15-minute call, www.talktoally.com, for a quick triage call. Whether it's this topic or, like most medical professionals thinking about retirement, they're saying, do I have enough money? Am I going to run out of money? And so that's what I specialize in. My goal is to change and improve your whole perspective and give you some direction on what to do next. That's what I do in my practice. So charitable giving and optimizing not only your generosity, but saving big on taxes. Let's dive into some smart, actionable, charitable giving strategies that you'll feel like a financial superhero by the end of the year. After all, there's no better time than now to not only give back, but also secure the tax benefits. So before we get started, I want to mention something. You may have some questions on this subject as we're looking to make or increase our charitable donations this year. And a few of you have reached out to ask how to talk or to work with me. Well, it's really simple. All you have to do is book a 15-minute call, www.talktoally.com, for a quick triage call. Whether it's this topic or, like most medical professionals thinking about retirement, they're saying, do I have enough money? Am I going to run out of money? And so that's what I specialize in. My goal is to change and improve your whole perspective and give you some direction on what to do next. That's what I do in my practice. So charitable giving and optimizing not only your generosity, but so why charitable giving matters for medical professionals? Well, as healers, your contributions to society are huge, right? But they don't stop with patient care. Supporting charities enables you to amplify your impact, help causes that resonate with your values, gain financial advantages, which is lowering your taxable income while giving generously, and build community connections. So strengthen ties with organizations that inspire you. And for a lot of you that I've met over LinkedIn and see what you do, I'm amazed at the different ways that you're giving back besides the jobs that you're in. So thank you for doing all that. But, charity, it's not just about writing a check. Strategic giving, especially through assets like stocks, can elevate your own philanthropy and your savings. The double win, donating stock instead of cash. Okay. This goes back to my days as, being the treasurer of my church. In December, I would receive a lot of calls from UBS, which is where we had an account, where our members had donated their stocks, right? They were calling to ask if I wanted to keep it as a stock or cash it out. So I would cash it out as, one, we needed the cash to run the church, and two, it was not our role really to be a stock portfolio manager. So a bit more on that later. And remember, the church was a designated charity, so we did not pay taxes on the stocks, and we needed the money at the end of the year. So why stock donations beat selling first? Okay, so here's a quick breakdown. If you sell an appreciated stock means it's a stock that's made money, you're going to pay capital gains tax on the profit. So only the post-tax amount goes to the charity. Okay, we're going to give you some details on that. But donating the stock directly, that's a different story. So we avoid the capital gains tax. So charities don't pay taxes on gifts. Let me say that again. Charities don't pay taxes on gifts. There's all kinds of hoops that they have to jump through with the IRS and everybody else to get that charitable status, but it's a benefit that they get is they don't pay taxes on the gifts. So 100% of the value benefits them. So we want to maximize our deductions, and you can deduct the full fair market value of the stock. So I'm going to give you an example to crunch the numbers. So explaining this to somebody the other day and putting it on paper helped a lot. So suppose you own $10,000 worth of stock and the original cost of that was $4,000. So if you sold it, your gains would be $6,000, right? 10 minus 4 equals 6. At a 20% capital gains rate, you'd owe $1,200 in taxes, leaving only $8,800 for the donation. So I hope that makes sense. $10,000, you bought it for 4, you sold it, you made $6,000, but now you're paying the taxes on it because you sold it. 20% capital gain rate, you owe $1,200 in taxes. So if you own $1,200 in taxes, now you've only got $8,800 for the donation because $1,200 plus $8,800 is the $10,000 that you started with. Now, if you donate the stock directly, you avoid the $1,200 tax. So you're not paying that tax. The charity receives the full $10,000. Okay, you can deduct $10,000 on your taxes, subject to AGI limits, because that was the value of your donation. Okay, that's a financial and a philanthropic victory. So I hope that makes sense. If you give them the whole thing, you haven't cashed it, you haven't paid taxes. Now the value is the value of the whole thing, and you can write off the value of the whole thing on your taxes. The results, everybody wins. Managing your tax bracket with giving. Charitable donations can also strategically lower your taxable income, keeping you in a more favorable tax bracket. So for high earning medical professionals, this can result in major savings. So examples, stay in a 24% bracket. Now understand that this thing that I'm talking about works with no matter what bracket you're on. So don't feel bad if you don't make a ton of money, but it's the concept of this. So our goal here, stay in the 24% bracket. Imagine that you're on the cusp of moving from 24% taxes to 32% federal tax bracket. A $15,000 donation could keep you in the 24% tax bracket. Okay. So this would save you from paying 32% on the income above the threshold. So we want to provide a deduction and amplify your savings. So this approach requires some planning, but it ensures you're making the most of your giving. Like I said, if you want to talk to somebody about that, then just book a call. Year-end charitable giving. The time is now. Why year-end timing matters. So December 31st isn't just the last day of the year. It's also your last chance to lock in the deductions for this tax year. So acting now means that you can help the charities meet their year-end goals. You may be getting a lot of emails. You may be getting a lot of phone calls. Everybody's trying to fundraise for next year. And I can tell you that with what's going on in the world, they're struggling more than ever to try and beat their budgets, right? Just like we are. We want to maximize our 2024 tax benefits. And we want to plan around required minimum distributions, RMDs. That's if you're taking it out of a 401k, if applicable. Okay. So some quick tips for year-end success. First, review your portfolio. Your portfolio is just anything where you might have stocks. This could be a cash account. This could be something at Schwab. This could be your 401k. Okay. Identify any appreciated assets or stocks that you might want to donate. Number 2, consult your tax advisor. Ensure that the compliance with the IRS rules and maximize your deductions. Now, if you're making a small deduction, that's not a big deal. But if you're thinking of something significant, you might want to talk to your tax advisor. Okay, number 3, if you need to talk to the charity and figure out where to transfer the stock, do it now. Okay, many of their team are also going to be off during the holidays, and waiting until January 1st doesn't count. So here it is, December 29th, December 30th, and you think, oh man, I want to donate the stock and be able to do that and take the credit for it. Well, guess what? They might not be there. They may be off for the holidays too. So do it now. I would say do it in the next week. Then the last thing I have here is document everything. Save your records for tax reporting. And one other point here that I want to add, if you're sending a check, be sure to put a date on the check for this tax year, very specifically, and you may put a note, even in the note, that says donation for, say, 2024. Okay. We want it to be very clear what your intention was. The other thing I would say is that it would be helpful when you mail this, that you have, if you're mailing a check, is that you may have tracking on it. And tracking, it doesn't cost very much. You may spend a couple bucks, but what you want is a receipt that you mailed it on the day that you did. Because think about it, with everything that's going on with mail and shipping at this time of year, what if that check doesn't get there until the 10th of January? And they don't check it, they don't cash it until the 20th of January, right? So we want to say what your intent was. My intent was that it applies to this year. I put it as the date on the check. I put it in the memo, and then I'm tracking the check. Now, obviously, if you can do things online, I wouldn't wait until midnight on December 31st, but you might want to check it out. And a lot of what's happening with charitable giving online is that you're going to get a receipt right away. And so keep that for your tax records, because here's the thing. when it comes to our tax returns and the things that we do, we have to prove what we did. Basically, we have to, if they say we're guilty of something, we have to prove that we're innocent. So have the documentation. Okay. One thing that I do a lot of times when it comes to a receipt or something like this, that I'm afraid that I may forget, is I've got a scanner app in my phone, Cam Scanner. It's free, or take a photo of it just so you've got it and then put it into your tax file. All right. So we're just trying to show that our intent was that this was applied to 2024. And that's my advice there. So now you're thinking, if you don't have a specified charity, what can I do? Well, I'm going to walk you through what you can do and then a couple of options that I've been involved with and why. This may help you decide what you want to do. So first, donate your appreciated stock to charity. That's what we're talking about, is that we're not cashing it out and giving them what's left after taxes. We're giving them the entire stock. And as I mentioned before, call them now and confirm that you can do this. So the next one is next donate to an organization that does just that. So back to my example as the church treasurer. When I went through some years of data, I found that we were not paying attention to our investments or changing it. Remember I said we weren't stock managers at the church. So I found a better option for us, and I moved it to the Community Foundation of Buffalo, which is the second oldest in the country. And you're saying, well, why did you do that? Well, what they do is take your donations and then they can distribute to not-for-profits as you choose, or you can choose a category and let them choose. So they've got kind of 4 areas. I know, one is education, one is arts. There's 4 different categories. But here's the thing, and this is like donor managed funds, is that if you've got a not-for-profit that you want to give to, then they give that to them. So everything that's going to them is, you're giving them, just look at them as the charity, and then they're distributing that to the charities that you want or to the category that you want. And what's interesting, and you say, why did you do this? Well, they've got a world-class investment team that you couldn't even hire if you wanted to, that manages a fund. And so you're not picking stocks, and they're responsible and they grow the accounts. So whether it's for a long-term account or a one-time donation, this works really well. And remember, donating, whether it's before tax money or stock or after tax, this is a tax write-off. So one additional point here is that you can still pick the charity anywhere in the world. They just implement it. They just have to qualify as a charity. So for this group, I was told at the time that for every dollar that they raised in Buffalo, they raised $17 internationally. Could be all over the United States, internationally. And I was like, wow, there is 17 times the money coming into this organization versus just Buffalo. And while you would say Buffalo people that are donating want to go to Buffalo causes, there's a lot of people around the world that want to donate. And they're like, I want to save the rhinos in Africa, or I want to do something. I want to, help the mercy ships. I don't know what it is, but this organization will put it where you want to put it. Okay. So I thought, that really spoke to their mission. And another organization that I love and I'm incredibly impressed with that I learned about this year is charitywater.org. Okay. So in that organization, 100% of your donation, 100%, 100 pennies on every dollar goes to putting in wells for clean water. And so far, they've done that in 29 countries, 19 million people, and 171,000 projects around the world. So I know that sounds like a lot, but here's what you need to know. There are still over 700 million people in the world that don't have clean water. And as you know, as a medical professional, not having clean water can cause all kinds of disease, all kinds of deformities. So they're changing that one village at a time all over the world. And, I would say, based on a presentation that I saw a while ago, can you imagine walking 7 hours a day to bring back contaminated water to your village? That's what's happening. It's happening all over the world. So changing the water changes the entire dynamic of the village and the economy, because now you've got people that were, the women walking 7 hours each direction to get water don't have to do that anymore. They can do more things to look after the village, to look after people, to potentially even do things that make money for their families. So 700 million people around the world drinking dirty water, they're worth checking out. They are my charity of choice for 2025. So we've talked a lot today about the charitable giving and saving on taxes. If you'd like a quick call to discuss any of this, or if you've been thinking about money in retirement, or are tired of thinking about it, or don't know where you are, or maybe where to start, or even looking for a second opinion, just like a medical diagnosis, it's probably time for a quick calibration check on what you're doing. So we can easily do that on a quick 15-minute triage call, and we can talk about it. So don't overthink it. Stop waiting for the perfect time. There is no perfect time. Okay. So I recently did this call for a medical professional and found $8,300 a year without even getting into my process, just from a 15-minute discussion. I'd say $8,300 for 15 minutes is a pretty great return, don't you think? That's what I love to do. This is how we can get things moving and set you up for a great 2025 and beyond. So let's do this. I'll see you soon.